December 5th this year, Mondial held an event at the Grand Millennium Hotel in TECOM or Barsha, You and the New World Order. This event was supported by the Chartered Institute of Securities and Investment, or CISI for short, and went down as a CPD event with Mondial being an accredited training partner. As part of the summary video, I'm here today with Sean Kelleher, CEO of Mondial, to understand, Sean, why a New World Order?
Well, Paul, the title was driven by the white noise of industry research, seemingly flagging massive tectonic shifts which seemingly influence our clients' financial planning.
Okay, and what are they?
Well, they're driven mainly by geopolitical forces, seemingly an attack on globalisation with Trump, Brexit all refer. But anyway, there's definitely a wave of large-scale political upheaval and economic liberalisation, which is breaking up what we've gotten used to over the last 35 years. In short, what's going on in the last year or so are issues that affect our clients' wealth management.
Okay, so we don't have a great deal of time today, Sean, but what are the key messages you'd like to portray?
Well, the Mondial section was very brief. We focused on providing advice to inexperienced investors with two angles. Number one, markets. Number two, equity markets. But the whole thing was driven by the background of the more white noise from the industry, which is telling us that we're in a low growth world. In fact, we all know that the US is slowing down. China has slowed down colossally. Glyn Owens in his text mentions that youth unemployment in Europe is at 40%. In short, our main message to clients is don't expect the year 2017 to be great for returns. Beating cash, yes, but fantastic returns is not on the agenda for 2017.
So after Mondial, there were two speakers. Glyn Owens, who talked more about the global standpoint, and he works for Momentum Asset Managers, and Steve Corran, who made it more regional picture, who works for Emirates MBD. Sean, how did you sum up their key messages?
Well, Glyn delivered his text in a sort of lecture style. It was very, very interesting, and for those who want to see that research, again, you can get it on the website. But Glyn's overall view is that we're reaching an inflection point of some description. If it's not an inflection point, it's definitely a change of direction. 3 slides help us explain what he means. The first one shows the Fed's inflation target at around 2% per annum. For the last 2 years, inflation has been below the target, but the big point is the sudden and recent inflation surge since June 2016. According to Glyn, this means that the Fed will raise interest rates. This slide sums up a major change in direction for bonds. After a 35-year bull market, interest rates must rise. Remember, if interest rates go up, bond values go down. This graph shows falling interest rates since 1981, meaning rising bond values. Given Glyn's view that interest rates will rise, from now, bond values must fall. Now, Glyn's third slide is a better summary in terms of portfolio implications. Paul, have a read.
Okay, so number one, low global growth to persist means modest returns are expected. Number two, inflection point in the cycle means diversification is key. Number three, high valuations and risks will mean the world is vulnerable to adversity. 4, periods of volatility are inevitable and tactical valuation opportunities should apply. And 5, sustainable recovery, which means very long cycles and the need to stay invested. So on to the second speaker, Sean, Steve Corran, Emirates MBD. What's the inflection point here?
Well, there are 2 points to the local GCC inflection or change of direction. Number 1 is the oil price. Number 2 is what's going on in the Saudi Arabian economy. All started probably in 2015, but becomes clearer in 2016. As Steve said, Saudi is the China of the Gulf. Paul, have a read of this slide.
Okay, so this quote comes from Saudi Deputy Crown Prince, His Royal Highness Mohammed bin Salman, who is incidentally also the leader of Vision 2030. We have a problem with military spending. When I enter a Saudi military base, the floor is tiled with marble, the walls are decorated, and the finish is 5-star. I enter a base in the US. You can see the pipes in the ceiling, the floor is bare, no tile and no carpet. It's made of cement and it's practical. There is a huge waste in spending.
Well, experienced Saudi watchers are going to tell you that's an amazing quote, because they'll say, when have you heard Saudi princes reining in expenses before? Anyway, look at the bottom point, which covers areas guaranteed to boom the Saudi economy. For example, when we compare Indian population 1.2 billion to Saudi's 30 million, they've got the same expense budget. One of the points at the bottom says that Saudi will be targeting military expenses as a boost to the economy. For example, they might go to the Americans and say, all right, we'll buy all these planes, but you must build them in Saudi, ensuring that some of the money they spend on military expenses will come back into the Saudi economy. I also thought that this slide from Steve was interesting in that it shows, one, the volatility of oil prices over the last summer, and two, that the volatility has not impacted on MENA equities. The suggestion is that the corporate sector is now adjusting to the lower oil price regime, and that's why Steve used this slide to suggest that MENA stocks are actually well priced in global terms.
Now, Steve did anticipate getting drilled on the oil price, so I did find it funny when he pulled out the famous 2016 slide of predictions that went wrong.
Indeed, but he had no choice but to expound the current House view that the barrel would reach towards $60 by the end of 2017.
Right, Sean, I'm afraid we have limited time. Add Steve and Glyn together, what's the message?
Okay, number one, nobody doubts that we are in a low growth world. Number two, in terms of markets, equities should rise, bonds are going to be severely depressed, and interest rates and inflation rates should rise. Thirdly, many headwinds. So the singular critical message is, again to steal a slide from Steve Corrin, stay calm, stay invested.
Thanks, Sean. In the summary, you'll find highlights of the seminar itself, along with all the material you might want to see that's been discussed. Thank you for watching, and remember to register for the next one next year.